Welcome. In this video, where is Zbcn coin price going? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The market is currently hovering at a very critical level, which corresponds to a strong support zone where the price has reacted upwards many times in the past. Such support areas are constantly observed by investors and traders, where the price usually rebounds and regains momentum when it sees downward pressure. Analyzing the current price action, the asset is currently at exactly this important support level, and the chances of a bounce from here are extremely strong. In technical analysis, support levels are considered to be points where the price of a financial asset can stop or slow down its downward movement. Price movements, especially at such important support levels, are usually met with strong reaction buying, and the buying appetite of market participants comes back into play. In this context, holding the price at this level can reinforce the confidence of investors and at the same time create a favorable ground for the beginning of the uptrend. This support zone has been strengthened not only by historical data, but also by psychological factors. In the past, the price has been observed to react significantly to the upside when it reached this level, demonstrating the importance of this area for investors. Many investors in the market consider such areas as turning points and want to take positions at these points. This may lead to an increase in buyer pressure and thus the start of an upward movement. The accumulation of significant volume below the current support area is another important factor that increases the buying potential here, because volume shows how much interest the price attracts at that level. The fact that there is currently a significant increase in trading volumes reveals the interest and belief of investors in this support zone. Movements supported by volume are much healthier and more sustainable. This positively strengthens the possibility that the price will bounce off this level and head higher. However, when the price reactions of this support level in the past are analyzed, the idea that a reversal that may occur here may not be an ordinary correction, but the beginning of a larger and sustainable upward movement is getting stronger. This is because in similar price structures in the past, the reaction from the support level has not only returned the price to previous levels, but also started a rally to new highs. Moreover, support zones are often of interest to institutional investors. This is because big players often tend to take positions at important support levels. Price compression in such areas and the sudden movements that follow may be a sign that professional investors, also known as smart money, have entered the market. This significantly increases the chances of an upside breakout from this area. The fact that the price is currently consolidating in this strong support area can actually be considered as a preparation process for a potential upward move. In technical analysis, horizontal movement in support zones is usually an accumulation process. When this process is completed, the price turns its direction upwards and uses the energy of this accumulation in a bullish direction. Especially in scenarios where resistance levels are weakening in the short and medium term, the movement starting from such supports can be quite fast and effective. If the price manages to bounce strongly off this support area, an acceleration of the upward movement may become inevitable in the coming days. This could lead to a break of the intermediate resistances first, and then to the start of a new trend. If this scenario materializes, it could lead to very profitable positions for investors and a renewed confidence in the market. But we can't decide on the analysis with support alone. Let's look at other metrics. Stay tuned. The Elliott wave theory is a highly effective tool for understanding price movements in financial markets and predicting future directions. According to this theory, the market moves in a 5-wave bullish structure, followed by a 3-wave corrective structure. In the current situation, the price seems to be forming the second wave of this theoretical structure. In other words, after the first wave of bullishness, a natural correction has started, and this is defined as the second wave. However, there is an important rule to note here. The second wave should not go below the bottom, which was the starting point of the first wave. Otherwise, the Elliott wave structure is technically invalid. However, we are far from this risk at the moment, and the current situation remains positive. When we look at the structural features of the second wave, it usually coincides with a period when traders hesitate, try to protect their gains, and hesitate to take new positions. However, this is only temporary. In the bigger picture, the second wave is a preparation for the transition to the third wave. Therefore, such correction periods are the breathing episodes before the start of the long-term uptrend. At the moment, while the price is in this healthy correction, it sticks to Elliott's rules. That is, it doesn't go below the point where the first wave started. This is a big advantage. In such scenarios, investors who are patient are usually rewarded, because with the completion of the second wave, the market moves into the third wave, which is usually the strongest, fastest, and with the highest earning potential. The so-called Queen of Elliott theory, the third wave offers the most opportunities for investors. For this reason, the current pullback or pause should not intimidate investors, but rather should be considered as the footsteps of a bigger rise. Another important factor is that the price is still in the second wave, meaning that it has not fallen below the initial level of the first wave. Technically, this shows that the structure is still healthy and there are no irregularities. In some cases, the second wave may even be a bit deep and cause temporary panic among investors. However, the important thing here is that this decline remains within acceptable limits within the framework of Elliott rules. The current price action meets these conditions. In other words, there is neither a technical breakdown nor a deviation from the rules. This suggests that the transition to the third wave will be on a much healthier and more reliable footing. The emotional aspect of Elliott waves should not be ignored, because this theory is not only a technical construct, but also a reflection of investor psychology in the market. The timidity that occurs during the current second wave is often short-term, and the third wave begins as investor confidence grows again. This is usually triggered by strong news flows, positive market developments, or buying moves by large investors. Thus, the uncertainty during the second wave is essentially the calm before the storm. Especially in highly volatile areas such as cryptocurrency markets, such structures can be observed more clearly. This is because investor reactions are more sudden and voluminous. This makes the patterns of Elliott waves more obvious. Looking at the current picture, the fact that the price is still in the safe zone, that is not below the starting level of the first wave, creates a positive and reassuring environment for investors. This makes it likely that if the third wave starts, the price will soon overcome important resistances and establish new highs. In short, the price is currently forming the second wave in the Elliott structure, and this structure is still healthy. As long as it doesn't break below the initial level of the first wave, this structure will remain valid and the possibility of a transition to the third wave will increase with each passing hour. The RSI indicator is one of the most effective and widely used technical tools for measuring the strength and direction of momentum in the markets. The values of this indicator usually fluctuate between 0 and 100, and certain levels are considered overbought or oversold. In the current situation, the current level of the RSI is in a very remarkable area in terms of technical analysis. This is because it is a reversal zone, where reversals have occurred many times in the past, and the price has been preparing for upward movements. Compared to past price movements, this region stands out as one of the levels where the RSI has made bottoming studies, and then strong rises came afterwards. This region, where the RSI is currently located, is an area that is on the radar of many traders who do technical analysis. Because this level is generally considered as a threshold where buying opportunities are evaluated, preparing the ground for the beginning of a new upward momentum in the market. In such critical areas, the RSI's downward momentum slows down, loses strength, and often turns upwards. At the same time, a flattening or upward curve of the RSI here may also herald a turn in the price chart. We should wait for the RSI turn. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.